All right, so Scott Trench, the guy that needs no introduction, CEO of Bigger Pockets.
And another great asset is debt funds. So you have a debt fund, right, at Pine Financial?
Yep.
So is everyone familiar with what a debt fund is? So well, maybe you could probably explain this better, but you do hard money lending, right?
Yep.
And you don't have $50 million to do 100 different hard money loans for $500,000 each, right? So what do? You probably get capital from people in this room, for example, in $50,000 or $100,000 increments in your fund.
That's right.
And you lend out money at 12, 13% interest, and then you pay out the interest to your investors at 10 or 11% or whatever it is after your fees are covered. How close am I?
You're very close. I mean, that's exactly the model, 100%. And we like the debt side because it's very, very secure, right? Look, your loan is here. And this is why you attracted to it too, I think, Scott. Your value of your note is here, and the real estate could go up and down, and they still owe you the money. So this stays consistent.
Yep, and that's what I did for the last 2 years. I just did direct hard money lending instead of as part of a fund. But that's a totally passive way to participate in the market if you just want simple cash flow, simple interest on that. That's a particularly good play. Who here has a lot of money in a 401k, but not a lot of cash outside of the 401k? Anybody like that? Yeah, so that's a great play there if you think about the self-directed IRA front and you want to get some exposure to real estate, but that's your primary use of capital. You could call up Kevin or maybe a couple of different debt funds and place 50,000, whatever in those, and you'll get 10% maybe simple interest. You can also usually reinvest the interest
that's right.
and have it compound just like you would in a stock market
It's like
investment.
you've read our prospectus.
Yeah. So yeah, I've read a lot of debt fund prospectuses. I think I might have read yours like a year or two ago. Yeah, but that's a very common. That's actually a very reasonable way to play the real estate market right now if you're a little bit skittish about where values are going or you want the cash flow.